let's start the clock and think about what kind of influence that has. A bit of size and scope. If we hold on to the losses that we saw after hours in Facebook, that would erase some $200 billion in market value. So we're talking about something that is very, very sizable in scale. But what kind of read across does it have, should it have, into other names? Because other ad-based revenue stories had been more resilient up to now.
I think it does have a big read across, and that's part of the reason is because we have seen some good results from some of the big US tech names in this earnings season. And generally it's been a story of like, hey, wait, those really big names, they are profitable companies, they are good companies, let's not panic about the whole tech sector. But now suddenly you're going, hey, maybe even some of the big names, the big profitable names, maybe they're a little bit vulnerable to a changing narrative. It's not like Facebook is suddenly not losing money. It is still making an immense amount of money, and we must remember that. This is just about a slight miss of estimates and a decline in its growth rate. This is not about a company suddenly that's not going to take in billions a year. But I think it's making people a little bit more nervous across the whole sector. So there's a chance that the bounce in the NASDAQ has already run out of steam. I wouldn't want to have too high conviction on that, but I'm certainly open to that idea.
OK, if you're open to that idea, what does that do to appetite for havens? Because you were talking about what you've seen in Treasuries as being really interesting, the fact that we're seeing money going into bonds and these yields are coming down. You're tying it in, of course, with the big global inflation narrative and whether the market has gone too far on expecting hikes from the Fed. But is it also just to do with this nervousness around the earnings story and risk aversion?
I think that's one of the things. It's all these things coming together. I think we've got a little bit more risk aversion. We've had some very, very poor growth data out of the US in the last few weeks, which is making people a little bit more nervous about what's priced in for the Fed. I think that overall this year, we could get even more than 5 hikes. But I do think that theme of pricing and rate hikes is a little overdone in the short term. I do think it might fade just over the next couple of weeks. Going into the CPI at the end of next week, I think the market will be a little bit nervous going into that. So I'm not sure we get much higher yields. And we could also be getting a turn in commodities, because in the commodity sector we've been extremely focused on the supply issue. All we talk about is the supply constraints. We know that, we've priced it, we've overpriced that story, but we haven't yet started talking about the fact that the demand story at the margin is turning a little bit more negative. So all those things together, slightly worse earnings, slightly worse economic data, perhaps a turn in commodities that might be coming, might mean slightly lower yields in the next couple of weeks.
OK, let's talk about that turn in commodities. You think it's coming. We're still at these quite elevated levels on oil prices. Bloomberg Commodities Index touches new all-time highs. It seems oil companies, according to the T-Live blog, our colleagues writing that oil companies starting to really see the benefits of those high prices, in particular Shell, as we've seen those results today. What are you expecting in commodities then, Mark?
So you're right, Bloomberg Commodity Index reached a record high yesterday. WTI closed at another 7 or 8 year high. So this is right at the peak. I actually just think that we might have just seen the peak yesterday in WTI. I think we're going to pair off a little bit from here. Not a long-term view, but for the next couple of weeks, I think we can come lower.
OK, Mark, remember you can get, thanks to Mark for those thoughts, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV GO is the function to use on your terminal.